What's going on? Welcome to my channel. I am the cover call guy. Hope everyone is having a great day, had a great week. For those who are new, my goal here is to create $120,000 in annual passive income. Right now I have 7 holdings: GPIX, QDIVO, GPIQ, IWMI, SPY, QQI, and IDIVO. My 7 holdings currently yield me about 70 grand a year. That's about 5.8k a month, 1.3k a week, $193 per day, and $8.05 per hour. All right, legal disclaimer before we start though. This content is purely for entertainment and educational purpose only, not investment, financial, or tax advice, because I am not licensed, certified, qualified, or caffeinated enough for that. So please, all opinions are mine. It may be wrong, misguided, or straight up nonsense, okay? Do your own homework and talk to a real professional before making any money moves. Remember, I am just some random clown you found on YouTube, and it could be spectacularly wrong. All right, now with that out the way, let's talk about a very popular issuer, right? Nicholas X, right? They have released ticker symbol NGHI. I'm just gonna say Night. This is the new crypto ETF. It is Nicholas Bitcoin and Treasuries AfterDark ETF. All right, this is my exposed on what it is, right? So I'm gonna be tearing it down. It is very, very new. So again, I'm just tearing it down on what it could do from the perspectives itself and how the strategy could play out. Okay, so they claim to have possibly found the holy grail of crypto timing. So let's see if this actively managed fund actually makes you money or bleeds your account dry. So for those who hold one of the most popular holdings, which is Blocks, right? BLOX, perhaps you can check this out and see if you actually like it to pair it up. All right, let's take a look. All right, there we go, much better. All right, so the raw data that they can't hide, that you should be always looking for, that you should care about. Okay, so let's look at the actual SEC filings for Night, launched April 8th, 2026. Right, title, investment, and Nicholas Wealth charge you a 0.97% expense ratio just to buy synthetic Bitcoin at 4 p.m. and dump it at 9:30 a.m. Okay, but that fee completely ignores the catastrophic cost of their forced high portfolio turnover. Okay, so portfolio turnover is high, mechanically mandated by daily rotations, is what I put in red, because I think that's what I think the strategy is. Okay, primary assets is CME Bitcoin futures, US Treasuries, and money markets. Regulatory structure is RIC and SEC registered ETF. What came in subsidiaries. That's pretty quite normal. So this is stuff that you should be worrying about, right? So the expense ratio is very, very high, and of course it does come with the territory of most crypto and active management. So you have to ensure that it does pay off for itself. Okay, the offshore death traps, right? So you aren't just buying Bitcoin. So you understand this, right? You are not buying Bitcoin. You are buying a non-diversified derivative income machine, okay? And to dodge IRS rules, they have to route up to about 25% of your cash through the Cayman Islands. Again, BTCI does this, and for the most part, almost all on the crypto income ETF does this too, right? So this could end up stripping away your 1940 Act investor protection. So CME limit down risk. Okay, if a macro disaster hit at 2 a.m., well, regulated CME circuit breakers halt trading, right? So you possibly could get trapped in a plunging asset and cannot execute your trade until 9:30 a.m. Okay, they reverse repo default. So during the day, they park their cash in treasuries and reverse repurchase agreements. Okay, the SEC filing literally warns you about the credit and counterparty default risk. So just understand that this is straight up. This is what they're telling you from the prospectus. Okay, gross alpha versus net destruction. Okay, so right now they're selling you on a massive hypothetical gross return, but the math, when you look beyond it, it is brutal. Okay, illustrative models shows that crossing the bid-ask spread for approximately 497 modeled rotation per year wipes out a lot of alpha entirely. So growth overnight alpha about 50 plus 50%. Estimate transactional cost is negative 49%. That's the modeled execution drag, and model net return is -2. So what does this all mean? Well, again, this is take into a scenario here. Again, this is new, but an estimated 50% hypothetical execution drag destroys your account, right? Your massive gross alpha turns negative after illustrative transactional friction eats you alive. Remember, a lot of these drag does happen. It is a new fund. They do have very bit as spread here that can end up eating away a lot of their gains. All right, ETF mechanic warnings here. Because Knight only holds Bitcoin, I believe so. I think it does. Only holds Bitcoins when traditional markets are closed. You are now facing terrifying structural risk completely unique to this ETF. So the premium discount risk. So your daytime NAV is flat. But what if BTC rallies violently during the day? Trader bid up Knight shares, potentially forcing you to buy at a massive premium. Okay, that's what you have to worry about. Buy at a discount, buy when there's panic. Just let it ride. Perhaps you're more cautious, or you're able to just sit on your hands for a while and just hold on to your dry powder and let something happen for it to drop in price. Then maybe buy at a discount, right? NAV tracking lag. So your daytime NAV completely and could decorrelate from Bitcoin's actual spot price from 9:30 a.m. to 4 p.m. which leads to the opening gap risk. So if a macro disasters hit overnight, now you're trapped until 9:30 a.m. and it could be a possible liquidation into thin panic liquidity. Okay, and in future basis deviation. So CME futures don't track spot perfectly. Okay, contango and backward nation can severely warp their expected returns. So again, it doesn't track the spot perfectly one for one, and a lot of the lag could end up being misguided and then mispriced. Okay, the IRS nightmare. So I think this strategy does destroy one of the greatest tax advantage of crypto, right? Long-term deferral, right? Because it is a regulated investment company, or RIC, right? It distributes 90% of its net income annually, meaning you might owe taxes every single year. Now, I'm gonna talk about the two, because I again, we won't really know until end of the year, right? So let's just assume it. The 60-40 illusion. Much of the futures exposure may qualify for Section 1256, which gives you the 60-40 treatment, right? But these contracts are marked to market at year end, right? Forcing realization whether you sell or not. And then of course the ordinary income trap here, right? Final tax character isn't guaranteed here. Any yield guaranteed from parking cash and daytime US treasuries or options would genuinely hit you with ordinary income rates. Okay, just understand that. Might not be a lot, it just depends. Okay, so the gray area. So why try this, right? So now that you have all the information from the prospectus here, right? Why try this? Why did they even build this, right? It relies entirely on the night effect anomaly, okay? Some studies have shown a significant portion of historical returns happened overnight, okay? While US daylight hours bled capital due to algorithmic profit taking. So on average overnight returns from 4 p.m. to 9:30 is plus 48% basis point, while the average intraday return, which is 9:30 to 4 p.m., is actually negatives. So that was the study. This is an actual study, right? It's just better to go ahead and buy near market closing, right, and let it ride it up. And then the market opening could sell, and then that's when you buy again and just sit on your hands and do absolutely nothing. All right, the weekend engine here. All right, the most heavily positive return historically happened from Friday's close to Monday's open, right? Retail speculation does take over while Wall Street sleeps, and then thin order books happen, allow global spot buying to easily pump the prices, all right? But if CME weekend gap tightens as institutional efficiency does improve, and it will improve, right? This entire edge does vanish instantly. All right, so the bet they're playing on could, and as technology gets better, as tracking gets more accurate, right, it does kind of close the gap here. Okay, launch phase liquidity risk. Again, it is brand spanking new. Okay, it literally launched April 8th, 2026. So getting into a newly launched, highly complex ETF does carry massive early adopter risk. Again, the risk you're willing to take could pay off here. Okay, high risk, high reward. That's how we like to play this, right? So again, I'm going to mention it, but you probably know low initial assets under management, right? It's brand new. It's going to have low initial assets under management, meaning thinner order books and a much bumpier ride for the early investors. It's going to have a wider spread, likely, okay? Until the fund actually reach a more massive critical mass, you are going to pay a hefty premium every time you cross the bid-ask spread. So this is where I see them having an issue if they do not build up their and then market maker dependency. So it is entirely at the mercy of designated liquidity provider to keep this glued together during volatile rotation windows. And again, it is playing the most volatile asset on earth, right? Bitcoin. All right, so what I'm watching post-launch. Okay, now that it's live, right, we do have to watch real-time execution metrics like a hawk. If for those who are interested, for those who have blogs, BTCI or any other, right, you have to do some live monitoring framework for night. And I'll break it down. Spread at 9:30. Watch the slippage when they are forced liquidated BTC. Spread at 4 p.m. Track the liquidity during the afternoon rush to re-establish. NAV versus BTC tracking, right? How badly is the overnight return lagging spot BTC? Future basis, right? Is severe contango relentlessly eroding NAV. Treasury yields, right? Does daytime cash parking actually offset execution costs? Now, if the rates rises, perhaps it will. Weekend gaps, right? Are institutions actually swaying away from Friday to Monday jump, right? What is big money doing here? These are things you have to look out for. Okay, extreme fragility, right? So if macroeconomics environment shifts even slightly, I'm going to say because the fund is so new and small, the fund is in extreme danger, right? It is completely dependent on the overnight hedge that they were betting on, right? Stating wider than the execution friction here, right? This can lead to a shrinking alpha. So if global institutional liquidity balances out the historical edge by, I don't know, 10, 20, or 25, or even 50%, right? It falls drastically below modeled execution costs. So then, what does this mean? It will guarantee systematic NAV decay. Nobody wants NAV decay. Nobody wants to lose money, right? The treasury yield collapse. This administration really wants the yield to go down. Okay. The daytime rotation relies a lot on the T-bills, the treasury, to generate that yield. It's not that high right now, 3 to 4%, right? If interest rate falls, your daytime parking buffers vanishes, right? Forcing the night trade to cover all costs, and you end up with nothing. That's how you end up with NAV decay. All right, so how does it compare against the arsenal, right? So let's move to the good stuff, right? You do have right now better and more efficient options, right? So here's exactly how I think Nike stack up against the rest of the Bitcoin ETF landscape, right? So let's look at spot PTC ETF, right? The risk, I'm gonna say all of them are high, right? Futures ETF high. Turnover for spot is low. Futures for medium and night is very high. Tax. Spot is deferred. I think futures use the 60-40 and night could be mixed. I'm not too sure yet. Simplicity, right? Spot is going to be the most simple. Futures is quite medium and night is very, very complex here. I think they might be one of the first one to ever pull this one off right now, I think, top of my head. So it's going to be very complex. If they are able to pull this off, they will probably I think Nicholas X, the issuer, is probably going to be coming for the throne of like Niels, Goldman, and Amplified, JP Morgan. That means they're able to pull a lot of things off, and you know, I think they're gonna really be making their stand, their name here. Okay, how to actually weaponize it? Again, this is my opinion. I absolutely do not recommend Night as a standalone investment. I do not. However, if you are quite seasoned, right, a bit more sophisticated, you can pair it with a tactical barbell portfolio. Okay, what is the core satellite approach? Well, in my opinion, you either hold IBIT or FBTC as your 24/7 core baseline and then use Night as a small satellite allocation to structurally overweight the historically lucrative overnight session. What if you want the tail risk hedging? What? Then pair it with Nicholas' sister fund, right? BHDG. Right now, you can aggressively pursue overnight capital appreciation with Night while capping catastrophic drawdowns risk of BHDG's put options. Well, what if you're more of the, you know what, I want more income blending? Well, then mix it with a more high income cover call strategy like BTCI or blocks to generate elevated monthly cash flow, right, offsetting Night's daytime cash drag, right? So these are my approach, right? You got all the information. Hopefully I didn't give too much of a downer, right? I like to give the good, the bad, the ugly, the beautiful, everything, right? So this is how to actually weaponize it for those who are really into the crypto space and own blocks or BTCI or whatever. Hey, now you have another option to pair it up with. Okay, my final verdict again, I want to say, please guys, this is a very speculative asset. It is a very volatile asset. Okay, this is highly specialized, tactically managed derivative income weapon here. Okay, it is, in my opinion, built for aggressive traders who understand contango and margin risk, not for the regular retail investors who just try to get their foot into income investing. This is for someone who actually understands Bitcoin. So if you want simple, low maintenance Bitcoin exposure, I would say don't touch this one. Again, why? Because first off, it's very new, and just let it ride out. Just let it see how it performs before you get into this, okay? I know some of you own BTCI and blocks. Perhaps if you already own it for quite a while and you're familiar with crypto, you're familiar with Bitcoin, you understand the risk, you like, you know, you're averaging down on big BTCI or blocks, this might actually be a great pair for it. So let me know what you guys think. I know there's a lot of BTCI and blocks lovers in the comments, subscribers and viewers. Let me know what you think if you would pair it up with this. Thanks for watching, guys. Hope this was informational, creative, got something out of it. If not, I apologize. Let me know what I could have added, and what information I could have got wrong or right. Let me know. I appreciate you guys watching. Stay tuned. Catch you guys on the next.